Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for the evening of Thursday, and we are now sitting here at December 9th, 2021. I am so sorry last night that I kept saying today was the CPI report. My mind was still with the doctors, 4 hours getting probed, poked every which way. You ever get a big physical yearly? I got the results today. Unfortunate for you, I'm going to live. And that's how it goes. But boy, it got definitely. I kept saying the reports today. I know I meant Friday. I don't know why I even brought it up, but that's how life goes. So where are we with everything? Well, a couple of things are taking center stage. You do realize that the Ukrainian situation, everybody's trying to build this up. No matter what President Biden does, he's in the wrong according to NATO members. They didn't like the idea that he offered that they should all sit down for a talk. Of course they should sit down. He's not wrong. You don't need a war there. That's how you get things going. We know that the Soviets, the Russians today, are going to make very serious demands. I think of them because they are saying, I'm talking the Russian side, that they think this could be the most serious situation since World War II. Others are saying since 1962, the Cuban crisis, for the U.S. involvement with this. So it's a serious situation. There's 250,000 troops in the Ukraine. You know, we hear the Ukraine. I don't think people understand how big their army is. There's 175,000 massed on their border from Russia. We all think Russia, obviously the superpower going in, but they're cautious the way we are. You can't use your superpower capabilities. It's great to have nuclear weapons. We could have won in Afghanistan. You can't use them. So you're back to tank warfare, ground troops and the like, the traditional war, and most people don't fight those, but yet that could happen in the Ukraine. Then you pull in the European Union. They have to defend whatever is going to go on to a degree. Does anybody really want to send troops? That's the problem. No, the Ukrainians today said they don't need them. Then the next wave we have to look at is COVID. The big wave's about to hit Europe. It's there, but now the bigger waves are going to come. And traditionally, we're anywhere from 4 to 6 weeks behind what happens there. They've got it, we've got it. So maybe we're 3 weeks or so behind it. If they get their big wave in the next 10 days or so, probably 2-3 weeks after that, the U.S. big wave is coming in. And of course, tomorrow, CPI numbers, and Wednesday, the FOMC meeting. I think it's a fait accompli that the Fed is going to say enough of the $15 billion a month cut. They're going to do something probably closer to $30 billion. The surprise would be that they don't. The market's baking that in already. And then the question is, do they raise interest rates sometime next year, or do they have to? Because if the supply chains do fill, do you keep the inflation going? Those will be the big stories that we have to deal with. But right now, as you can see, you're within breathing like this of hitting all-time highs in the S&P. You're up 2.92% for the week. You're up 132 points, and you're not far from those all-time highs. The market's pausing right where I've pointed out to you regularly this week. I said we're back into this resistance zone, and that's where the market's stalling as it tries to figure out what to do. I am of the opinion Santa's going to arrive, and you're going to pop through that because traditionally at year end you get that type of rally. What the market is now doing that it hadn't been doing, and I can show this a lot easier. What the market had been doing is staying under the 18-day average of closes. Now the battle is to get over that number, which it probed up to on Tuesday. You can see today, Wednesday, tried to hold that, giving up a little bit tonight and then coming back up. Who cares? Now the game is, can you hold that? And then if you poke through this number, which is the high of Wednesday, remember we're in Thursday already, does the market do anything with it? All right, so here's Thursday. That was Wednesday. Now, if you can poke through Wednesday's high, you get a pattern that changes. You get higher lows, higher highs, and that starts the bull trend again, potentially. We've got to look to see where the Bollinger Band is. It's up here at 47.67, plenty of room to get up there. And momentum is up, but here's what I don't like. It's overbought already. in order to embed, to get a real powerful move, you got to get both of these numbers over 80. They're nowhere near it, so you're just overbought. When we look at the NASDAQ battlegrounds, the 18-day average, you're caught between the upper, lower Bollinger Band. Similar story. Today we're down quite a bit in this market if you take a look at it. It got hit pretty good, 243 points, but all it did is pull back to the 18-day average, and that's about where you're at. I don't see a trend. Momentum is fairly flat here. It's looking to see what next. It is not in that phase of this is what's next. Similar to the S&P, should you clear up here over the 35,926, you could get higher lows, higher highs. Now, you've already got one number over 80, so this is the first market to get a number over 80. It's very overbought, but you have to get both the K and the D line, the red and the blue, over 80 to embed. So if it's going to embed, this is the beginning of that process. Right now, it's just overbought and not trending. In the Russell, again, what did I tell you when you were down here? I said, if it tries the upside, and I had reasons to believe it if you lose the embedded reading, that the battleground's going to get pretty rough between the 200-day, the 100, and the 18-day average of closes, and that's exactly what you're doing. Does it mean that there's a lost cause? Absolutely not. Any close now over 22 in the close, over 22.80, will set the bulls up. And they'll be looking, I think, at higher prices, maybe the upper Bollinger Band over time, if that occurs. I didn't say it would. In the VIX, well, if it continues to fall, I'm going to stick my neck out and continue to say what I've been telling my paid subscribers in the morning. I don't think you're getting back down to these low numbers that we did for quite a while. I think volatility is going to stay here. I think next year you're looking at more volatility coming in. People look for more insurance. Why? Because the Fed's going to possibly be on that move to raise interest rates, and that could dampen the economy. When you raise interest rates, no matter how you think about it, it's a brake on the economy, right? It's like riding a horse. You're pulling back on it. And that is not what everybody wants to see in a true bull market. In the T-bond market, we have fallen into major support. This is just what the market typically does in front of a CPI number. So while the swing line's down, the bias is up. The 10-year note, the same thing. You don't want to be in these markets right now, in my opinion. I think you need the dust to settle, and then you make your mind up what you want to do in those. Dollar index, could you be more neutral going into the CPI report? I don't see how you could be. This is just total neutrality. Same, hanging here without a trend in the eurocurrency. British pound still in the bear camp, hits the lower band, bounces. But at the same time, are we embedding? So you have both numbers. You can't count Friday's data. Both numbers for Thursday under 20 on that day and this day. You're fully embedded. So until the red line closes back over 21. These bounces in the market probably attract the short sellers looking for lower prices. Bitcoin, as I told you, now I'm reading on the news wires and analyst thoughts that we could be in store in next year, which is, today's the 9th, what is it, 20 days away, 22 days away or so. That the market could drop another 20%. Okay, so back to the 40,000 level, 38,000. I don't think that's going to dissuade a lot of people. I think they'll look at it as their buying opportunity. You know, you get a different type of person on those coins than you do on other investments. They buy them, and that's their kids' inheritance. This is going to be the big thing. In the energies, similar to the stock indices, you've rallied up and you're fighting a big battle at the 18-day average of closes. Could it be more neutral than this going into the CPI number? No. So what I think the smart money's doing is they're going to go into cash tonight. They'll take a look at the report, decide between then and next Wednesday how they want to reposition themselves. I wouldn't be surprised if that is what's going to happen. Now, we'll be talking right after the report comes out in our through our software, and talking to people. I don't know if you're aware of it. In our charting software, we put out voice recordings. David Hightower comes out from the Hightower Report. He'll tell you what he's seeing in the market. Terry Rogenstadt will be there. Then our own staff all comes in as well. You hear an awful lot. I don't go on that. I don't have the time. I have a lot of paid subscribers, so this is free, and I want you to see it because this is what our trading clients see. So how do you get this information? It's simple. You want to call us up or go to our website to sign up for it. If you call us, we get you set like that. The oral information all plays through two ways. Our handheld devices, we'll give you the app for that, as well as our charting software. We have two versions, a web-based and a Java-based, so download or just a regular version that works on your browser. I get people that tell me, well, it doesn't work on my browser. It works on every browser. Okay, I don't understand what people say sometimes. If you got a browser, it's going to work in the browser. It's that simple. The other thing, if you go to our website, under the word free offers on the top left at www.iraepstein.com, everything you need is there. With that, I'm going to get a good night's sleep because it's going to be an active day tomorrow. You have a good trading day.